Folks, I hope you're ready for holy smokes, this ain't no jokers week in the stock market. I'm going to go through 5 reasons why this is going to be an epic week in the stock market. What exactly is going on so you guys are prepared for all what's about to transpire this week in the stock market. And I hope you guys enjoy this. As always, make sure to subscribe to the channel if you are not already. Alrighty, guys. So first, reason why this is going to be an epic week is, first off, if you were not aware, Martin Luther King Jr. Day is on Monday. So essentially, everybody's back on Wall Street now from their, let's call it the Christmas, New Year vacation. They all started to come back last week. And when you have a holiday like this on a Monday, it's going to cram more trading into a 4-day period, essentially, instead of a 5-day period. So look for definitely a lot of activity in the market from basically Tuesday through Friday, okay? Second reason why this is going to be an epic week in the stock market this week is this is a first big week of earnings. So this past week, we got a few earnings out, okay? It was the big banks. Now, were the big banks earnings good, bad, anything like that? For the most part, they were pretty solid. There was a few numbers here and there that Wall Street was a little concerned with, okay? So that's why you saw, I don't know if you guys noticed, this was very, very important, but the biggest big dog bank out there, JP Morgan, all right, Chase, their stock ended up falling about 6% on Friday or so. And so that wasn't a good start to earnings. Usually you like to see the banks come in with really strong earnings right off the bat. And we had several of the big banks report on Friday. And nonetheless, it wasn't too impressive. So this week we have a ton more financial related companies. Like the amount of financial, like basically anything financial related is going to have reported by now. Okay. Goldman Sachs, Charles Schwab, PNC, BNY Mellon. You obviously have Bank of America here, Morgan Stanley. So basically everybody that's a financial institution in any major way, they're going to, U.S. Bank Corp right there, they're going to all report. You have even Discover Financial Services. So we're going to get to understand on a very high level, like, where the economy's at, where the banking sector really is viewing the economy and transaction, those sorts of things. I think something like Discover is obviously very, very important. Visa, Discover, companies like that, they're going to tell you how the economy is, because those companies, they're the ones running all the transactions. So they're always going to know basically what's going on. So I always feel like UPS, FedEx, Discover, Visa, companies like that, if you want to really truly understand what's going on with the economy and if things are good, if things are bad, if things are going to shape up to be good or shape up to be bad. If you really want to know that, you listen to companies like that earnings calls, because they'll give you they're going to tell you how it is. And, those are the most direct companies that are affected by a positive economy or a bad economy, right? So that's going on there. You, as far as like Tuesday goes, not a lot interesting to me there. Some of you guys might use Interactive Brokers. Their earnings are coming out there. Wednesday, like I said, Bank of America, Morgan Stanley, those are just ones you have to watch, right? P&G, Procter & Gamble, I'm going to be interested to see Procter & Gamble numbers. They're not really the type of stock that's going to move honest. HNST, which is a stock I've been buying the last couple months pretty heavily. But at the same time, Procter & Gamble, at the end of the day, they make some similar products that Honest makes, and sometimes cost pressures could affect the companies. I want to hear if P&G's taking pricing with everything that's going on in inflation. I assume they are. That would be good for Honest, because it's going to make Honest's life a lot easier if P&G's taking pricing, which I almost guarantee they are, because they're the big dog in the space. So it makes sense for them to take pricing in a time like now and increase their profit margins and those sorts of things. So I'm going to be really interested to see what P&G has to say, what their numbers are, and what their guidance is for the year. And remember, this is arguably the most important. Earnings of the entire year, because this is the earnings when companies like to announce what their upcoming yearly numbers are expected, their revenue. So it's very, very important. You have Fastenal reporting, which is a industrial company that is another one of those good gauges on just how the overall economy is doing at a particular time, because they have so many different business lines that sell products that you need for a lot of construction work and things like that. Other than that, not too much interesting there. You have Alcoa, which is a huge steel company. They're going to be reporting. You have United, which they're going to likely speak about how either their travel's been interrupted One, because so many of their crew has been out with Rona. Not just that, but a lot of people have pulled back from traveling because of Rona. So nonetheless, United's not in a good spot in the very short term. However, likely see a bounce back toward the end of Q1 and going into Q2 and moving forward as things, more normalized. Let's call it that. Like I said, Discover Financial Services, I think, is just a really important company to pay attention to, regardless if you own it or not. American Airlines, another airlines company. All the airlines are basically in the same boat right now. Maybe some are doing a little better than others, but they're all in the same boat. They're all facing a really bad situation with Rona right now for their customers and for their crews as well. Okay. You have Baker Hughes reporting. You have Union Pacific, which is one of the biggest rail companies out there, reporting before the bell Thursday, and then CSX reporting after the bell. And remember, I just told you, UPS, FedEx, Discover, Visa, those sorts of companies, you can get a really good gauge of what's going on in the economy and guidance and those sorts of things. Well, guess what? Union Pacific and CSX, exactly those same exact type of companies that you're going to be able to understand how things are, where confidence levels are at, and those sorts of things. So I think Union Pacific, CSX, I think those are two more companies you got to pay attention to. Netflix is important. So Netflix is the first big tech company to be reporting their earnings, essentially. Nobody reported last week for the most part, other than a few big banks toward the end of the week. And so this is the first week of earnings, and they're the first big tech, multi-$100 billion market cap. So Netflix, that one is going to start things off with a bang, either or a bust. I don't really have an opinion on where Netflix's numbers will be, but being that it's a first big tech to report, I think it's going to be really, really important to hear those numbers and hear, where they're at. As far as me, am I buying Netflix stock, selling the stock, interested in doing anything like that, right? Well, obviously, I don't hold Netflix stock, so I can't be a seller of it. And at the end of the day, Netflix is one of those businesses that they just continue to execute. I think the only negative Netflix has really is over this next quarter or two, those comps are really, really tough, because at this time last year, we still had, lockdowns in a lot of places and things like that. And so those comps are really, really tough, but we know Netflix is a beast. We know they somehow make a new hit show after new hit show, and they keep it going. They keep a momentum going. So yeah, never been really my type of stock, but at the same exact time, it's just one you got to respect, because they're a beast, man. You got PPG reporting, which is kind of a similar situation to this company here, where you're gonna they own a lot of businesses that essentially prosper in the construction field and industrial field in general. So PPG is one to pay attention to there. Outside of that, nothing too much on Friday. Schlumberger, and then you have Ally Bank reporting as well. Okay, but yeah, this is a first week to the big earnings. So that's the second week why this is going to be a big week. And just if you didn't already know and you haven't downloaded Hungry Bowl yet, now that we're going into earnings season, one of the big advantages to having the Hungry Bowl on your phone is essentially, or your iPad or whatever, is we have the earnings call tab. So as these earnings come out, obviously there's so many companies reporting all the time, it's hard to listen to them all. So we just make it super easy. You type in whatever ticker you want to hear their latest earnings call, and boom, we try to get it up usually within 24 hours of the earnings call happening. So you don't have to go to the investor relations page and surf around a bunch of different pages and where the heck is this at, because all companies put it in a different place. So yeah, if you haven't downloaded the Hungry Bowl yet, get ready for this earnings season, because that's one of the big advantages of Hungry Bowl. Okay, third reason of these 5 reasons why this is going to be an epic week in the stock market this week is essentially we've started out the year horrible. I mean, two straight losing weeks in the stock market. That's not a good vibe to start the year on, right? A matter of fact, it can't get worse than 2 bad weeks to start the year. So I think this is a very important week that we have a green week. And here's why. Think about it psychologically. You go into a year, there's a lot of optimism going into a new year. That's how it is, okay? And you go into that year, and imagine a situation where the first three weeks of the trading year are all negative weeks. That's rough, nonetheless. That kills all optimism in the stock market. And I can already tell you, there's a lot more bearishness in the market right now than there is bullishness. I did a poll on my Instagram. And if you haven't followed me on Instagram, follow me on Instagram. I did a poll yesterday on my Instagram stories. And I said, do you think stocks are going to be up this upcoming week or down? And there was a lot more people that said, yes, the stocks are going to be down more more this week, then no. And that's coming from my audience, which naturally my audience is going to be, I would say, more of a bullish audience than most audiences out there. And so think about that for a moment. It was like a 70-30 split, a 70% of people saying, we're basically bearish this upcoming week versus bullish. And so that just kind of shows you the sort of market we're already in. You get a third straight losing week this week, and I just don't, I just think there's going to be even less optimism and more pessimism in the market. Now, in terms of, does that change me as far as buying stocks or anything like that? Absolutely not. And actually, I feel the more bearish, folks are out there, the more bullish I feel, essentially, and especially for companies I love if they're trading at 52-week lows and just getting kind of devastated. And so, but at the end of the day, we can't deny that this is an important thing just for, the psychology of the market right now, because it's been in a tough place, to start the year out 3 for 3 straight losing weeks. Everybody always goes into a year optimistic, but my gosh, yeah. If you start for 3 for 3 going down, there's nothing to be optimistic about in the short term, right? Fourth of these 5 reasons on why this is going to be an epic week in the stock market is this the last chance for funds, investors, to really reposition if they need to reposition going into earnings. So let me explain this for a moment, and then we'll come back to this slide. I really want to explain this. So for a lot of us in the market, including myself, I do not reposition going into earnings, right? I'm not like, let me sell out of this stock over here and let me put more money into this stock over here because I think there's a higher probability this company beats earnings versus misses earnings. Or I want to sell out of this stock because I'm afraid it might go down on earnings and I'll buy back in after earnings and things like that, right? I don't make those sorts of decisions because at the end of the day, I've just found over time, it's a losing game. That's just a flat out losing game. I'm not good at that thing of trying to time in and out of these stocks and like, I'm going to get in, I'm going to get out, I'm going to get in, get out. However, you got to understand a lot of hedge funds and a lot of big investors in general, they do like to do that. They like to get in and out of these positions, and they like to say, hey, I think this stock's going to fall. I'm going to go ahead and sell out of this. I'm going to maybe even go short this position. Even though I like this company for the long term, I think there's risk to the downside here in the short term. Let me short the stock or buy puts and sell out of the position and reposition into this company over here that I think there's a high probability they're going to beat earnings, right? And maybe they hear something come out of another company that's in a related industry, and they're like, ooh, that bodes well for this company. Maybe they have some, I don't want to say inside information, but maybe they have some sort of information that, is making them feel extra bullish, so they move some money over here. And so this is something that funds do all the time, not something I partake in, not something I believe in, because I think it's almost an impossible war. And at the end of the day, if you're truly a long-term investor in these companies, to get in and out, it's not, you're not really a long-term investor, right? A long-term investor is somebody that buys in, and if the stock goes down a bunch, they buy more, and they hold, right? And they don't try to time it out week by week because the market might fall or the stock might fall on earnings, because just as simply as it could fall, it could go up, right? So I've seen it time and time again where stocks that are going down and downtrending stocks reported great earnings and their stock flies up. I've also seen it before where stocks, that have been downtrend more. That's like a coin flip, and it's not worth to mess around and try to get in and out of these stocks. But you got to understand, a lot of funds, a lot of big investors like to reposition going to earnings. Hedge funds do it all the time. And so this is a big week for, kind of their last real chance. And the reason being is these 3 weeks right here, that's where you get the gauntlet of earnings. So it's already too late to reposition by this time because it's already in your face by this time, okay? During these 3 weeks, you're going to get all the big tech companies to report their earnings over that 3-week span. All the big dogs of all the big dogs are all going to be reporting, okay? Apple, Microsoft, Facebook, Amazon, Google, McDougal, NVIDIA, all of them. They're all going to be reporting. And so, good old Tesla, Massel, they're all going to be reporting during this time frame. Also, you're going to get 70% plus of other companies out there in general to be reporting during this 3-week span. Like I said, this is the intro week to earnings. And then right here, my gosh, okay, I know, I would say 70 to 80% of my stocks that I personally own are going to be reporting in this 3-week span right here. So it's going to be earnings craziness, earnings epicness, all right? And so be ready for that. That's the 4th reason of 5 reasons why it's going to be an epic week in the stock market, okay? Rona. You want to talk about something important that nobody's talking about? The Rona numbers. So, once again, no one ever even really talks about these numbers anymore. It's kind of extraordinary to me, but I can almost guarantee you these still move the algorithms of the market. And the way I view it is I think the algorithms read this as running numbers high, sell stocks, running numbers going down, buy stocks. And especially for growth stocks and anything seen as a risk on type play, I think those will do better as the numbers start to go down. Now, in terms of the running numbers, it's been awful, right? I mean, it's been the worst ever. I don't know, once again, the mainstream media doesn't even talk about this anymore. It's interesting how that happens, right? But they don't even talk about this anymore. And yet the numbers are not just the worst we've ever seen. They're by far the worst. We've had several days where we've had over 1 million new cases in the United States of America. And I'm not even sure how many folks are getting counted because the thing is with, this Omicron's been, for most folks, very, very mild. So I would bet you the numbers have been way higher than what they've been. It's just a lot of folks are just like, feel a little sick, but not super sick. So they like, I'm not even going to go to the doctor. I'm not even going to get a test. I'm just going to, heal up at home and then be back good again, right? And so I almost guarantee you that's going on. And so the numbers we've been seeing are probably a lot higher in reality than what we've been seeing. But in terms of who's actually been reported for the numbers, our 7-day average is over 800,000, which is just extraordinarily high. Now, I think this upcoming week's an interesting week because I believe the 7-day average numbers will start to fall. Not like fall off a cliff, but I believe they're going to start downtrending. And I believe they're going to continue to downtrend into February. And as we get into March, I believe numbers are going to skyrocket down, where we're going to have this massive kind of, and then just down to like non-existent type numbers as we get closer and closer to the springtime. And so I think this is an important week to watch those numbers. Why do I think that? Well, one, you start running out of people to infect, as crazy as it sounds. When you get these insanely high numbers, most folks that could get it are getting it, right? The second part is, when you're coming off of Christmas and when you're coming off of New Year's, obviously you're going to see numbers go crazy because guess what? Friends, family, everybody's doing events, stuff like that, being around each other. And so as that ends, which has ended over the last week or two, the numbers will likely start coming down. And if we follow the same path we did last year, that's exactly what we're going to see. And so I expect the 7-day numbers to start to slowly drop this week and then continue to just drop and drop and drop as we get closer to February, as we go throughout February and into March. I think they're going to likely skyrocket down. And I think this is really important for not actual like human investors, but I'm talking about for the algorithms as those numbers go down and down and down and down and down. Because what we saw is as the numbers were going down, I pointed this out recently, okay? As the numbers were going down throughout this time period, the Russell was rocketing up, okay? And then the Russell peaked around November 4th, and that's when the numbers started to go up massively again. And obviously just they went crazy. And what have we seen? Growth stocks, a lot of the Russell stocks at 52-week low after 52-week low. I think part of the reason of that is honestly the algorithms pushing these stocks down. And we've seen it twice now. It's 2 for 2 as far as tracking this, okay? If we see it 3 for 3, it's not a coincidence. If these numbers start to, peak and go down, and a lot of these Russell stocks and a lot of these growth stocks in general start to bounce back, that will be 3 for 3, and there's no coincidence around that. If it happens 3 times, there's no coincidence, okay? And so this is another reason why I think this is going to be an epic week in the market because of those 7-day numbers. And like I said, it's not for the human investors because most of them aren't even paying attention to this. I think it's more for the algorithms than anything, okay? Which is something Kathy Wood's been talking about pretty recently, not in regards to the way I'm talking about it here, but she has been talking about a lot of the algorithms and how trading has been going on there, guys, okay? Woo! That was a beast of a video. I hope you guys enjoyed this. As always, try to keep you up to date on what's going on in the market. Also, if you want to be kept up to date all the time, download the Hungry Bowl on your iOS and Android store. Thank you also to everybody that ever leaves us a review on the Hungry Bowl. Our team works their butts off for the Hungry Bowl to try to make that as good as a product as possible. And so I just want to say to everybody that ever leaves us a nice review on the App Store, we appreciate you guys. That means the world to us. That literally, we obviously don't charge for the app or anything like that. So, leaving a review is like, the best payment we could ever receive. That's amazing, guys. So appreciate you. Much love as always. Don't forget to subscribe to the channel. If you're looking to join me in the private stock group, the private Discord channel, those sorts of things, to learn directly from me, check out pinned comment. Have a great day. Peace.